Hey everybody, it's Jack and welcome back to another portfolio update video. In today's video, I'll be going over all the stocks I bought last week, as well as all the stocks I'm planning to buy in the week ahead, and just going through and breaking down my overall portfolio and talking about some of the stocks that I own. Before I jump into this video, I do want to take a second and say thank you to all of you who have been watching and supporting this channel. Over the past week, we just hit 10,000 subscribers on the channel, which is absolutely mind-boggling. There's really no words to describe how grateful I am to all of you who watch and support the channel. I did not expect for this to grow as fast as it did. I started this channel 2.5 months ago just as a thing to keep me investing and to hopefully get a few others into investing as well. I had no expectations for it to get as big as it has this fast. I'm really blown away by all the support and everyone who comments and likes these videos. It means a lot to me, and we're just getting started with the channel. So strap in and come along for the ride. I can't wait. To truly show my appreciation for all the support you guys have given me, I plan to do a giveaway in next week's portfolio update video. The giveaway is going to be valued at roughly $1,000, so you're really going to want to stay tuned for that. So make sure to hit the notification bell down below so that you get notified whenever I post a video, because you're not going to want to miss next week's video where I have the giveaway so that you can enter. And again, I'm truly thankful and grateful for all of you who are supporting this channel along this journey. I really do appreciate it, and let's jump into the video. So in today's video, as all my previous ones, I'm going to go over all the stocks that I bought last week, give my explanation for a few of them, and then I'll cover my breakdown of my portfolio. We'll look at all the stocks I own, how much of each, and look at the split between growth stocks, dividend stocks, and ETFs. And then we'll dive in and go over my watch list for the week ahead, and I'll talk about some of the stocks that I'm going to be adding to in my portfolio and give my reasons for why and where I think the overall stock market is going in the next few weeks. So a lot of information, and let's jump right in and get started. So jumping right into my account status of my Wealthsimple Small Account Challenge, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So I deposit into this account around $100 to $200 each and every week in order to invest into some of my favorite stocks for long-term growth. So my account status currently sits at $4,215.50. Up on Friday, just about break even at $7. And for the past week, my account's actually down. So we are in the red. We're down $37.76, down 0.89% overall for the week. And if we go to the 1 month, we are currently up $65.28 over the past month, or 1.57%. So we're still doing pretty well for the past month. And if we go to all time, we are now up around 2% all time. Last week we were around 3%, but with the decline this week, we are now sitting around 2%. So you can see that my portfolio didn't have the best of weeks, down around 1% overall. And the majority of this was because of a few of my growth stocks. As they are volatile, they swing quite a bit. And a few of them swung down around 10% or so, which brings down the overall account slightly around that 1%. Whereas all of my dividend positions were pretty even on the week, some of them slightly down, some of them slightly up, but they balanced each other out. And I'm really happy with all of them, and we'll get into that. So just quickly, before we dive into my portfolio breakdown and my exact stock positions, I just quickly want to touch on the subject of compound interest and really just stress the importance of starting to invest as early as possible. The longer you can leave your money in an investment and let it grow and have that growth start to compound on itself and snowball greater and greater over the long term, so talking years and years, an extra year or few months here and there can actually really add up, and it doesn't have to be a whole lot of money. You can invest $10 a week, $100 a week, $1,000 a week. It really doesn't matter. The same concepts and growth patterns apply to whatever sum of money it is. So let's jump into an exact example. So here's an example that highlights the importance of compound interest and starting to invest as early as you can and how it can make a huge difference. So for this example, you have two best friends, one who's named Jack and the other who is Blake, and both of them are the exact same age. At the age of 21, Jack is super smart and he begins to invest. He invests $2,400 every year for 9 years until he's the age of 30. So this averages $200 every single month. During these 9 years, he's consistently investing, and after the 9 years, he completely stops investing. He does not invest after the age of 30. He just quits entirely investing for the rest of his life. And during those 9 years, Blake was not investing. He was spending his money on other things, living a lavish lifestyle instead of investing. And at the age of 30, Blake begins to invest, and he invests for the next 37 years straight. And every single year, he invests the same that Jack did. So he invests $2,400 every year for 37 years. And this example compares at the end of 37 years. So when both of them turn 67 years, how much money they both have. And this is assuming that they both get the same return on their investments. I think this example uses around a 10% annual return, which is not totally crazy and not out of the picture for any investor. That's actually the stock market average. But the crazy thing is, because Jack started that 9 years earlier, his investment is able to grow and compound every single year on top of his initial investment and just snowball and grow. And it begins to grow exponentially after a few years. And this is the thing, investing can seem like it's not really working too well over the beginning and you're seeing slow returns. You're not really seeing those quick wins that you would like. But over time, they really start to grow and compound on each other, which is the huge power of compound interest. So from this example, you can see that at the age of 67, Jack's final account and investment portfolio is sitting at over $2.5 million, and he only invested $21,000 out of that $2.5 million. So he only invested for those 9 years to get this $2.5 million. But because he let it sit there for so long and just let it grow and grow and grow, it turned into the large sum of $2.5 million. While over the same time period, because Blake started to invest later than Jack by those 9 years, his total return at the age of 67 is under $1.5 million. So a full $1 million difference because Jack started earlier. And in this example, you can see that Blake was investing for 37 years while Jack only invested for 9. So Blake actually put into his investment account just under $100,000. He put in $91,200. So he put in over 4 times as much as Jack, but his still overall return is $1 million less than Jack's. And this just goes to show the power of compound interest and the importance of starting to invest as early as possible. And you'll thank yourselves down the road for putting in a small amount of money as early as you could and just letting it grow. So remember, this is the key. If you're any young investor or any investor, start as early as possible. Please, please, please. So now jumping into my portfolio spreadsheet where I track all of my stock positions as well as my passive income from dividends. This spreadsheet is heavily automated and will update for you every single day automatically. And again, if any of you want to use this spreadsheet, there will be a link to download it in my description of my video. A lot of you guys had questions last video about how to add certain stocks. How do you add American stocks? How do you do this or that? And today I'll show you. I'll just do a quick example. So a lot of you were wondering how to add new stocks, and really the key column in the spreadsheet is this exchange one. So this is the stock exchange that the stock trades on. So if you don't update this accordingly, it will not work. So some of you were wondering for US stocks. So if I wanted to, I could change this to Apple. And then if I just go over, I have to change this to NASDAQ. And now it will load in the proper pricing for Apple. But it says, of course, I bought it at $2.92. What is steal of a deal? You can also do different ETFs. So if you wanted to do ARKK, you can throw that in, and it trades on the New York Stock Exchange ARKA. And there you go. It's now working too. So if you're not totally sure about what stock exchange your stock trades on, you can go to the official Google Finance website. And that's what I use to pull the stock data live. So it will tell you exactly what stock exchange it trades on and what you'll need to fill in for this exchange column. Now that we've covered that, let's jump into the stocks that I added last week. So I didn't do a whole lot of exciting moves last week. I just added to positions I already own and helped boost some of them up. I mostly added and focused on my ETF positions as I wanted to bring up the weighting of my ETFs in my account. So first, starting off with my dividend stocks, I added 2 shares of Algonquin Power. So I brought my shares from 18 up to 20. Algonquin Power actually didn't have that great of a week. It dropped a few percent and is currently trading at $20.16. So I think this is a great price if anyone's looking to start a position on Algonquin Power or add more shares. I'm currently adding more shares each and every week, and it currently makes up 9.6% of my portfolio. The second dividend stock that I added to last week was SmartCentres Real Estate Investment Trust, my one REIT in my account, and that is SRU.UN. This one right here, it's currently trading around $28. I'm up around 6%, but I've been adding 1 share every few weeks because this is a stock that pays an over 6% dividend, and it makes dividend payments every single month. So you get monthly passive income from this stock. And this is one that I'm going to focus on adding to in the coming week. Heading into my 4 growth stock positions, I have H2O Innovations, Good Natured Products, Greenlane Renewables, and Standard Lithium. These are currently the 4 penny stocks or high growth stocks that I own. But as you can see, there's actually 3 out of the 4 are in the red, are negative. So ironically, they're not my growth stocks currently. They're actually weighing down my account right now. As you can see, almost every single one of my other positions are in the green. And right now it's H2O Innovations leading the charge of bringing down the account. It's down 16%. But again, these are all long-term investments. And I really think these will grow for decades and decades down the road. So I'm really excited about these, and I'm not worried about the week to week or even month to month volatility of these stocks. If H2O Innovations does continue to drop and gets down below the $2.25 range, I'll think of adding even more to this position. And the 2 growth stocks that I actually did add to last week were Good Natured Products and Greenlane Renewables. Good Natured Products was trading at around $1.40 a week or two ago, and it's now back down to around $1.13. It's actually negative from where I originally bought in at $1.15. So as it's been trading below $1.15, I've been slowly adding a few shares. So I added 25 shares last week. So I now have a total of 175, and it makes up just under 5% of my portfolio. And then Greenlane Renewables is a renewable natural gas company that, again, I'm super excited about long term, and it's one that I've continued to add to as it dips. So I added around 10 shares to Greenlane Renewables. I now have 125 shares, and it makes up 5.4% of my portfolio. And now getting into the 2 ETF positions that I added to last week, I added to my VDY position as well as my VFV. VDY is a high yield Canadian dividend ETF. It holds a bunch of Canada's top high yielding dividend stocks. This is probably the top ETF I recommend for any new Canadian investor. You're going to be able to get passive income from this ETF as well as see some slow growth year over year. So I added 2 shares to VDY. I now have a total of 8, and it makes up 7.2% of my portfolio. And then the second ETF, VFV, is the Vanguard S&P 500 Index ETF, another top ETF for any new investor. This is one that sees on average around a 10% growth year over year. So a great stable ETF to hold in your account. Looking at my dividend tracking, we can see by adding my ETF positions and my dividend stocks last week, I was able to increase my passive income from $89 a year to now being at $97 annually. So we're almost sitting at $100 in passive income each and every year off of our dividend and ETF positions. So now looking at our pie charts where we can see our portfolio breakdown by individual stock, sector, or asset allocation. Looking at my portfolio breakdown, my watch list for the week ahead is going to be primarily focused on stocks that have much smaller weightings in my account. So I'm going to be looking to add to positions over the following week, such as Fortis, which makes up 3.9% of my account, as well as Enbridge, which currently sits at 4.4%, SRU, Smart Centers, which I talked about, it currently sits at 4% of my account, and then I'm also going to be looking at the ETF XIT, the Canadian Tech ETF, as it only sits at 3.4% of my account. And if we look at my asset allocation graph, we can see that from last week, I said that my goal was to get my ETF positions to make up at least 20% of my portfolio, and I did exactly that. So my breakdown is now dividend makes up 46.6% of my account, growth makes up 32.8%, so around a third, and ETF makes just over 20%. My goal is to bring growth down to around 25%, bring my ETFs up to 25% of the account, and have dividends sitting at around 40 to 50%, give or take. So over the coming weeks and months, I plan to add more heavily, as I've been doing, to my ETF and dividend positions to bring down the weighting of growth stocks within the account to help de-risk and really just set myself up for long-term success. That leads us perfectly into this weekly watch list for the week ahead. When it comes to growth stocks, like I said, I'm going to be adding to my Canadian Tech ETF, XIT. I want to add one more share at least if tech continues to dip. So I'm going to be monitoring primarily Canadian tech stocks early into this week. And if on Monday or Tuesday we see a significant dip in Canadian tech, and if XIT drops by % or so, I'm going to be picking up that 1 or 2 shares. And then when it comes to dividends, like I said, I want to add to Smart Centers, SRU, for monthly income. This one offers above 6% dividend and pays monthly, so it's great. And then I want to add to some of my smaller dividend positions as well, such as Fortis, FTS, a great stable Canadian dividend stock, as well as Enbridge, which I'm sure you guys all know. Enbridge pays currently above a 7% dividend yield. So if it drops down to $46, I'm going to be snagging another share of Enbridge. So those are the positions I plan to add to over the next week. So I hope you guys enjoyed this video, this recap of my portfolio update. And again, hit that notification bell down below to be notified when I post my videos, because next week I will be doing a huge giveaway valued at around $1,000. So you're not going to want to miss that. But I hope you guys enjoyed this video. If you did, smash that like button and subscribe to the channel if you haven't already. Lots more content coming your way. And again, thank you all for 10,000 subscribers. It means a lot, and I'll see you in the next one.